Oh, tell us about your background.
Sure.
Tell us about your background and then the fund. And
sure. So I've been working in and around startups in New York City since 1995. Started in the ad tech space originally, and
Dakota.
Sorry?
Dakota,
correct. And so started in the ad tech space originally, and then went from there to Etsy and helped Etsy grow from 7 to 75. And at that point, I started actively switching my focus from building companies to investing in them, and met Bill Losey and Mike Edelhart along the way there. And Bill founded Social Starts in 2012. And so that I became a venture partner in 2015 after being an investor in the original fund. And so now that has grown from a $1.7 million fund in 2012 that was raised in 2012 to a operating company called Ataraxia, which operates currently 4 active funds under two different viewpoints, really. The first fund is Joyance. Joyance is a fund that has 3 operating funds: an early stage fund based in the United States, an early stage fund in Europe, and an opportunity fund which looks at later stage ventures across the world. Joyance invests in delightful moments, right? Humans will take time, spend money, do things that will raise their state from 0 to 1 or from -1 to 0. And so Joyance looks for opportunities that allows humans to do that. Some are scientific based, some are not. We invest in things like everything from cashmere sweaters to Vietnamese coffee to deep science microbiome that is looking to prevent osteoporosis in that fund, all of which create, at some level or another, a moment of delight. The other fund is called SH Squared. SH Squared stands for the Science of Health and Happiness. The science of health and happiness is what we see as the next really interesting thing that comes out of the combination of artificial intelligence and biology, right? You have an opportunity to take all of the computing power which was developed over the last 30 years and now apply it in a way that it can impact individual human lives. And so that fund really is about finding companies that help people live longer and better lives. So there's a lot of crossover between the funds. We often co-invest. We don't always co-invest. We do have an opportunity fund that's the later stage fund out of Joyance, but the remaining funds are early stage funds. We don't lead rounds typically. We don't take board seats, and our check size is anywhere from $150,000 to $350,000. So yeah, those are the funds. We're global. We have investments, really across pretty much everywhere in the world except for Africa and Latin America. Although we do actively look for deals in those geographies. Yeah, so that's us. That's a little bit of my background too. So I don't know exactly the format here, but
I'm sorry that we go around the room and we have the attendees introduce themselves, and then we just open it to Q&A.
Oh,
It's
great.
easy.
So, very happy to be here. Sorry that Mike couldn't make it. He is flying to Boston this morning. So thanks again for having me.
I'm so happy you could be here with us. So Abby, we always have an Abby. Usually we have 2. Abby, do you want to introduce yourself and tell us what you're working on? Or tell Charles what you're working on?
I'm assuming it means me, Bonnie. It's
Yes.
Abby Sugar, Shiana. Okay, all right, amazing. So I'm Abby Ludwise. I am working on a home well-being product. It's a home hygiene product with a go-to-market strategy that is hybrid, wholesale, DTC, and then ultimately to lead into subscription. We noticed really great numbers for home cleaning that were happening during the pandemic, and sort of a shift in nesting culture, work from home, and a need to sort of create safer havens for our home, and interest in reduced plastic use. We're using a sugarcane bioplastic for our refills. and non-toxic ingredients in the product itself. We also have a really cool NASA developed ingredient. We're using biomimetic botanicals that were developed in zero gravity by NASA. So it's a lot of fun for us to be able to launch some of those things.
Well, thank you. Catherine.
Good morning, I'm Catherine Jackson. And Bonnie, just fantastic weekly emails. I really enjoy them. So I run a company called My Fair Places, and there's actually 2 apps. And where this talk was interesting to me is something I've planned in the future. So My Fair Places is about people saving their favorite places, and it's very simple, collect very streamlined Yelp, but with the idea that it's a positive experience, that people aren't saving or making negative reviews, or only saving places they love. And I view that as like a utility app. The second app I'm developing at the moment is a concept called Pods, P-O-D-Z, where people are putting in their favorite experiences, whether they're health, wellness, travel, could be games, could be anything. And it creates a creator economy, a creator marketplace, and that people can actually purchase that, or they can be free, and they can also support a nonprofit. And over time, I'm planning to merge the 2 applications. And then the third part, which is where this talk was interesting to me, is being people be able to have virtual experiences, but through wearable tech. And the whole idea of My Fair Places is it's supposed to be positive. That's why I sort of called the company that. So I wanted to avoid people writing negative reviews, or if you don't like a place, you just don't save it. So in this evolving the company, so places and experiences. So that's where I'm headed with it. And so I'm very interested to hear everyone's conversations today. Thank you.
Thank you. Sam.
Got to come off mute. Thanks, Bonnie. Appreciate it. I'm Sam Bogosh, CEO of Axle AI. We do software for teams who collaborate with a lot of video. We just did an equity crowdfunding round on Republic and raised close to $500,000. Actually, I have to thank Catherine. She was one of our investors in that round. So great to see you. And also thank Bonnie, who's been a huge help in getting us going. We're at about $1 million run rate, probably do about $1.2 million this year, and largely bootstrapped. And we're looking to close 1.5 million seed round in the next couple of months.
Sure. I know the Chip is.
I'm Braden. I do work with Bonnie. Actually, we co-host the Clubhouse. Can you hear me?
Yes.
Sure. Here's who I am. I'm Braden. I do a Clubhouse with Bonnie on every Wednesday morning at 9 a.m. In my other life, I actually do a lot of strategic acquisitions for corporate clients. I've bought 70 companies in my career. One of my specialties is helping put big companies together with small early stage companies to help build those extraordinary partnerships to go to market. So one of my big things is helping clients find the right opportunities, primarily in insurtech and fintech, as well as potentially healthcare as well. I've done a lot of work in that over the last 20 years. So that's who I am. Thank you.
Thank you. Tommy.
Hey, good morning. Thanks for having me, Bonnie. I have worked in tech and startup for a bit of time, doing various things in operations, in women's entrepreneurism and community, as an engineer, and most recently, I've been pursuing natural language processing and deep learning for quite a while. I just finished a master's in data science, and I'm hoping to make machine learning and AI work for I guess humans in a dating app that I'm working on right now. So hopefully both the human perspective and the machine perspective are going to work together in this. Thanks for having me.
Thank you. Sandeep. Oh, so my computer screen keeps jumping around.
Hey, I'm Sandeep Luke. I'm calling from Westchester. I'm working on a location discovery tool for food trucks, and so we are trying to help food trucks discover, locate the right time and the right location, whether it's at parks, schools, and so forth, so that they can optimize their revenue. We have a background in route optimization. So the idea would be that once they discover various locations, we can also route them and help schedule their week out. And so we're really looking to find small businesses grow and also bring delightful moments, so to speak, at parks. So we're currently working on a pilot with a natural popsicle company based in Georgia and Florida, and testing it out in the South first, and then expand into other categories once we figure out the model.
I'm curious, has there been an uptick in business with food trucks because everybody's in many places are eating outside? And I hadn't thought of that, but I was curious.
Yeah, no, we're trying to figure that out. So the popsicle company that we're working with, I mean, they're getting into their slow season, and so we're helping them think about planning for next year. And they had to pivot their business model with the pandemic because they were very events based, and with the events sort of changing, we're trying to help them find new locations based on mobility data and other types of human gatherings in public spaces.
Thank you. Pritesh.
Hey everybody, thanks for the invitation. Happy to be here. So I'm partnered with Sandeep here on the same concept. Background is in artificial intelligence, computer scientist, been working in the industry for 15, 16 years. And I have family in small business who struggled in the restaurant industry and just started to think through, we gotta start to use this technology, AI technology we use for big companies, see if we can help the small guy. And I guess the vision behind it also is that we're going opposite of digital. People come out to places where the experience is really good, it's interpersonable. So can we use AI and mobility data where people are naturally gathering, where the movement patterns have changed beyond after the pandemic? If there's enough of a interest in certain areas in public parks and all, can we just uproot that into create an event where vendors can come and people are having good experiences? So that's kind of what we're working on.
Okay, thank you.
And we're very early trying to see if we can prove out the pilot, essentially.
Oh, thank you. So questions, I meant to ask after listening to these speeches, and I've never mentioned this before, Charles, if you have any questions for the entrepreneurs, give them an investor feedback. That'd be fantastic. What, if the audience, if the attendees have questions for Charles, go ahead. But two-way street. Anyone?
I'd be interested in asking Charles a question. Charles, from your perspective, you sound like you're in some rather interesting markets. How do you find those kinds of opportunities? Because they're not, I'm not just meaning to be offensive, they're not as mainstream as a lot of other things we look at. So how do you choose those? And how do you find them?
Yeah, we actually have a couple interesting ways to do it. Look, VC is all about deal flow, right? And so we actually have, if not the most robust, one of the most robust company finding engines in venture capital. And it's a program that scrapes all kinds of different databases. Some of which are, things that you would think are pretty obvious, right? Where you're looking at the SEC to see who's raised money, if they're filing a form in California, all the way down to we actually look at LinkedIn, Twitter, bios. So we're seeing people who have, with computer science degrees that switch their bio to working on something new or in stealth or whatever. And then we're feeding all of those into our database and looking to figure out how to, whether or not that's a company that we're interested in, right? And, of course, also networking, always is something that VCs try to do really well. The other thing that's a really good source for us is, we have, because we're working on medical research typically, try to have deep relationships into particular biology departments, at Harvard or Stanford, Johns Hopkins, anywhere that we can get into academia and try to build relationships with the department chairs, the professors that are there, trying to get into the students there. That's something that we try to do as well. I will say that healthcare is pretty mainstream. given it's 17.5% of the US GDP, but.
I have two questions.
Thank you. And like I said, the other question, I guess, is how do go ahead, Abby.
Oh, no,
Go ahead,
please. I have two questions as well. So please ask your other question.
No, go ahead.
Oh, okay.
Go ahead, Trevor. You have a
I'm
follow-up,
fading
go
in
ahead.
and out. Well, my follow-up question is, how do you help if you're going to advise, because a lot of the people are on this call are entrepreneurs and startups, what do you recommend they do to be more visible? Because obviously you have a very aggressive, proactive way of building up that pipeline. What should they be doing to make it easier for people to find them from your experience?
You know, I think that it's just a lot of, you know, I shouldn't say old fashioned, but it is doing the things that, you know, sometimes make you uncomfortable. I personally, like, I don't care if you send me a blind email, right? So I think the strategy, if you're, well, first of all, I should say that it depends on exactly the type of fundraising that you're conducting. And I assume you're asking about fundraising. You know, and having a really measured approach and saying, you know, dividing your prospect list into how to think, you know, people that I can get to via network, people that I'm interested in talking to that are not on my network or I can't get to, and determining strategies based on both of those. And, you know, I think that I get a lot of contacts, people contacting me on Twitter. I think that's a great way to try to get yourself into conversations and build a reputation about being an expert in your space. And I think that I think that cold email and, you know, lack of warm intros is something that is, I think it's ridiculous that some people require a warm intro. I certainly don't. I try to answer every email that comes to me unless it's so far off base. You know, we invest in life sciences and biotech. You know, if you're talking to me about, you know, Bitcoin mining near the equator or whatever, like, I'm not going to answer that. But right, so I do think it's a really measured approach and being very targeted about your outreach. And, you know, but it's you know, it's hard work, you know, so that's what I would say. Abby, you want to ask your question?
Yeah, I have two questions. One is that we're dealing with the challenge of the first check-in, and a lot of investors don't do first check-in. We have a couple lined up that are very interested. The frustration of it is that, you know, we would have everything we need if we could get a first check-in. Any advice on finding those investors that do first check-in? And I'm just curious about the, I guess, the challenges from the investor side, why some investors don't do that first check.
So, I mean, we often don't write a first check. So to answer your second question first, for us, it's about and so there are two, depending on the stage you're in here, for us is that we don't want to take the responsibility of being a lead investor, right? We're very active. We'll write 40 to 50 checks this year. So we don't sit on boards of directors. We don't take fiduciary responsibility in that sense. And so, you know, to us, being a lead, you know, confers responsibility onto us, and responsibility that our fund is not structured to take on, right? So that's often a reason. The second reason is they're actually telling you no. And, you know, they don't want to say no. They want to see, and they're looking to see, oh my God, if Sequoia jumps in here and I've already sort of said, yes, yeah, then I'll do that. I'll ride along with that great fund that's saying yes, right? So I think that's reasonable too. I think one thing I would do is look at the group that you've had that's said yes, but waiting on a lead, and see if you can negotiate with them to set a price amongst them and say, look, let's commit to this, right? And build a, you know, especially because, and I have no idea what stage you're in, but especially because you might not necessarily be in a stage where you need a board of directors or need a traditional lead investor, right? So I would say to them, look, I'm just throwing numbers out, 300,000 of my 500,000 round committed, just waiting on someone else to set a price. Why don't we get together and set a price? What if we I'm going to send you docs at a cap of 7 and write your checks, and then we'll get rolling. Because if you're interested in backing me, then you want me to have my money so I can start returning that money to you, right? The sooner I raise the money, the faster I get working, the faster your money gets back to you, even though it's still going to be 5 to 7 years. And at that point, you're going to get a much better sense of their real temperature as to whether or not they actually are going to invest. Because if they're not going to invest, that's better. Like to me, I want to know that, right? So, see if they're willing to get together and do that, and realize what the impact of that, again, making up a number, 300,000 would be on your business today. You really want to support me? Let's, the 3 of you, 7 of you, whatever it is, write your checks. I'm going to set a price. We're going to negotiate with the best of us, and let's get moving.
Excellent. Thank you.
Yeah.
Tommy was commenting on your investment portfolio. Do you want to comment aloud, Tommy?
Like a year to talk about all of this. It's so amazing. And look at these companies.
Yeah, thank you.
I've never seen anything like this. It's so great. Maybe I should read more, but this is amazing. Wow. Yeah, well, I have a related question maybe. Yeah, so, I think in entrepreneurism, you get a lot of people who want to make a difference and who figure out like that they can have an effect in like sort of downstream ways, if not directly trying to do something great and an improvement to happiness, more or less, like these companies in the portfolio. So my question is sort of like, if you are, so I'm right now in the dating space, and I can easily see how one can improve the experience and how important dating actually is to people's personal development. So This is like this is like a thesis for me in this company. But it's hard to say like, oh, the company is like a B Corp or for good. Certainly you can use science more responsibly, which is what we hope to do. But I think a lot of people would love to have like a more direct impact on things and have like a more positive message, like all of these companies certainly like use science to the betterment of humanity. So just, I guess in general, from your experience, like what are some of the commonalities that you see among these entrepreneurs that have allowed them to sort of go directly after such altruistic sort of it's just like a very interesting portfolio and such a focus on these types of entrepreneurs and companies. I just hope that maybe you could share some of your wisdom.
Yeah, I mean, I think that it may be a stretch to calling it wisdom, but thank you. I think that, I think one of the commonalities we see in the entrepreneurs in the portfolio is truly understanding how, and I'm going to use the word technology here, but when I say technology, it could be a biology, it could be, right, it could be science, it could be AI, it could be, is how does that in the daily life of someone improve their life, right? And so they've thought deeply about how to productize that technology in a way that impacts the human's life, and it's a single human's life often. And then that starts their own conversation in their own mind about how do I build a business out of that? And so the difference between, and we talk to a ton of entrepreneurs who, or I should say wannabe entrepreneurs, who have really great science or a really great technology, but can't conceive of how to make it a company that can actually impact millions of lives. And so that is that's the art, right? The art is figuring, how do I use this and make that jump? And then there's like, we're not even talking about executing on that plan or whatever. But that's really where it gets difficult, right? So that's what I would say is deep knowledge of the technology to understand how it impacts an individual's life, and then figuring out how I can get it to impact more than just one person.
Right. Yeah. I think that, like I think you tend to, if you have that desire to improve people's lives, like in a micro sense and like a macro sense, I think that probably starts really young for a lot of people who end up doing that for a career. It's probably just like a central tenet of their personality. But sometimes it's hard to express it in different industries, specifically, particularly, and then like also when you get caught up in like the operations and dealing with partners and things like that. So I guess it's sort of like I guess creating like a company mission, making that part of your brand, and actually explaining it to people, because a lot of people think that maybe this is not pragmatic enough. You know, it can get very sort of ethereal. So it's really interesting how, I mean, some of these companies like Attention Grace, you know, it seems like it could be a very broad mission, but they were able to sort of bring out, you know, a couple of key points that make it really have I guess, an emotional impact, an impact for humanity.
Yeah, I mean, I think it's, you know, I will say that not all the entrepreneurs in their portfolio have thought this way since childhood, right? And often they, you know, they were interested in research, or they're interested in technology, or they're interested in something different, but have figured out how to apply technology to a problem that they are really passionate about. And that comes in different ways. You know, Attention Grace is a really interesting company, and it focuses. I mean, one of the things you look at as a VC fund is what populations are being underserved by technology, right? And you know, so one of the reasons I'm not such a fan of the term femtech, but you know, we really looked at femtech and said, wait, there aren't enough products addressing various different aspects along a woman's life, and where can we find? So that's the macro environment, right? There is all of this technology to be applied, not enough impacting women's lives. Where in women's lives do we see opportunities to create investment that makes us money long term? And so, you know, then we apply that in different stages of women's lives, depending on the companies. And Attention Grace is a great example of a company that says, okay, you know, menopausal women, here's an opportunity, right? There's an opportunity to create a brand that makes women feel good about themselves while providing a product that is necessary. And so, you know, that's a great example of understanding, oh, you know, some people have this particular need on a daily basis. How do I create that? How do I make that a company? How do I then brand that? And yeah, I think we're really proud to have Attention Grace in the portfolio.
Okay, cool. That's interesting. So yeah, there are a lot of great scientific companies in this portfolio as well. So scientific focused.
Oh yeah, I mean look, we have a team that is able to analyze deep science, right? Which is, you know, a huge advantage for us.
Amazing, great.
Guys, I see that your data engineer is a woman too.
Well, we have a few women on the team and a few data engineers. So we have more than a few. I think I believe at this point we are majority female in the fund. I'm not sure about that. We're close.
So I do know that go ahead.
So go ahead.
Oh, I was going to say that, you know, of course, I'm very familiar with Social Starts, which was the predecessor to this, but I know that Social Starts was like very active in writing, like basically a check a week. Are you still following that?
Yeah, we're very active. We'll write 30 to 40 checks this year, and 3/4 of those are in new companies, and the rest in follow-on. Yeah, very active.
So I had a question just on measurement and KPIs. I guess the traditional way of investing, like, okay, how do you measure an impact to happiness and wellness or whatever purpose? Is there a framework you follow? How do you kind of determine what's one's more impactful than other? Like, you probably have to make those choices at some point.
Sure, it's actually something that we're spending this year actively investigating, and our managing partner, I guess her title is Chief Operating Partner, Neha Tana, who's based in the UK, has worked deeply with some organizations in Europe that are creating a framework for how companies impact, human lives, and is deeply a part of that. And then we'll bring that into our investment theses. I mean, at this point, we just look at, does this technology, increase the length of a human life? Does it make them happier? And happier is we don't think of happiness as a science, but there is a lot of science now on what is happiness. A lot of it driven out of UCLA. And so what does it mean? What does it mean to take someone from a state of 0 to a state of 1? And how does that, because you don't want to live to 125 if you don't have agency, you don't move, you can't actually live life. And I'm not saying we want companies that are increasing people's lives to 125. So determining that now is okay, how many people does this issue impact? And does that impact enough lives to make a difference, right? So that's where we are. I think to get deeper and more philosophical and determining the KPIs of that is something we're actively seeking out now.
Hey, Charles, can I ask a follow-up question on that? Since
Sure.
This is an area of repetition I think a lot about, the separation of happiness versus wellness. The idea of a dopamine and the impact of that and seeking that versus maybe something broader. How do you guys distinguish sort of that line on what's well long-term versus what's creating delight short-term?
Sure. Well, essentially we invest in both, right? So if you think about Copper Cow, which is a coffee company that we invested in, I think we're in 2 or 3 of their rounds at this point. And it's creating a pour over experience, Vietnamese coffee pour over experience. And all of it is delightful, right? Because it's a ritual. You create the opportunity to, slowly create this cup of coffee. And then it's coffee, right? People pay a lot of money to get some caffeine. And that's a delightful moment that lasts, 10 minutes, right? To taste the ritual, to taste the impact of the caffeine. That's not creating long-term happiness. It isn't, but it is a delightful moment. It does change your state in those 10 minutes, right? We also are very invested in the mental health space. There are companies in the portfolio that are looking at, devices for mental health. We are very interested in this idea, what we call emergent communities, which is, communities that you're a member of that really need specific support from the technology behind creating that community experience, right? So we're actually investors in 2 slightly different types of maternal communities, right? And creating access to healthcare, access to these communities of women that are relying on themselves and to build that community, right? And those create much longer mental health impacts. So both are important to us and both matter. Because you want your daily life to have moments of delight, but you also want to create better mental health. And if you think about we look at 7 things, really, 7 to 9 things, which truly impact longevity, and mental health is really close to the top of that list. I mean, the top of the list, honestly, is access to healthcare. But mental health is a really big factor on that list.
So just to dig a little deeper on that, if you don't mind. So Sunny and I have a lot of these conversations. I mean, Sunny's background was working in mental health startups before this. And for me personally, depression in my family with my mom and dad was clinical depression was a big thing. That's why we kind of connected on this.
Yep.
And as he talked about like the short term and then the long term, I used to call it enjoyment versus pleasure. Pleasure is something in the moment, enjoyment is something long term.
Sure.
And is kind of the goal from the startup, can we, if we can start measuring that, if we tried to even measure that in some ways, would you suggest some sort of framework, some sort of way that you actually thought about doing that in terms of somebody doing something? How much does it actually affect pleasure versus enjoyment?
Yeah, I'm
or the best thing you've seen before.
Yeah, I mean, I think that I'm in a way, I'm loath to give you advice on how to think about that, because I don't know your business well enough to understand exactly what you're trying to achieve with that. And it's not something that we think we're in a position as a fund to dictate to the companies in which we invest. I think that the idea that we can create, ways for people to think about happiness and inject that into our investments is wrong, right? What our job as investors is to pick up great ideas that entrepreneurs are smarter than VCs. Like, this is just true. So we're looking for ways that entrepreneurs can pick up these things, and then we might look to take that and install it into our investment framework, right? And that's exactly what we do. But we're not going to be good at determining, a scale within a company that measures that.
No, that's fair. That's fair. Okay.
So since you are focused on joy, I was wondering how COVID has, the lockdowns and, the different rules have affected that. Because, for example, I'm looking at the food truck, and I'm looking at the fact that Peloton shares are down because people are going back to gyms, and just how this has affected your investment philosophy, or what you're looking at presently.
I don't think it hasn't changed our investment philosophy at all. It changed it. It didn't really even change the way we did business that much. I mean, we've never had an office. We always worked from home, and so that didn't change. And the things that matter in our theses, that hasn't changed. COVID certainly has an impact on the types of companies that are being created, and our view is that it's very difficult to invest in companies non-pharmaceutically, which are addressing specific diseases. So we haven't made any particular investments in companies that are specifically targeting COVID. Having said that, there are certainly companies that have COVID as part of their approach that we've invested in. And that's maybe just from an outsider's perspective, a distinction without a difference.
Yeah, that's right.
Right, but so it really hasn't changed our investment philosophy in a great deal. If anything, it has created an opportunity where we said, oh wow, we need to find more startups that allow for access to care. That's I think, and also chronic disease. We have our investments in the chronic disease space are mostly centered on diabetes. But there are other opportunities to invest in the chronic disease space.
Thank you.
Yeah.
I'm curious about subscriptions. Do any of your companies focus on subscription models? And do you have any advice on, what's been most successful or best practice for that?
Yeah, we have we have business models all over the place, but that sounds bad. I don't mean it that way. We have a number of different business models that work. CopperCal is a great example of a subscription business. The most important thing in that for us, and I think subscription is a great business model, right? Predictable cash flows, all the things, and everything I would do would be to optimize for predictability, right? Signing up for the longest possible period. And I'm not saying you're locking people in and not giving them ways to get out of it, but creative ways to get them to sign up for the longest possible period. And really measuring, having the analytics package that really allows you to measure when a subscriber is about to drop off, right? And I don't know exactly what you're, how you're building this, but are they less active? What is happening? And understanding that you need a feedback loop with those people, and as they're about to drop off, really having a good conversation with them. The best companies in the portfolio that run subscriptions really well are proactively conversing with that customer as that subscription is about to renew. They are not hiding and saying, oh gosh, I just hope I hope they forget that they can unsubscribe, right? That approach long-term doesn't work. And it's really about proactively having a conversation with those folks.
Interesting. I guess our instinct was to try to sort of lock it in to be as seamless as possible and not to have, but you're saying having those confrontations, if they are confrontations or discussions is
they don't have to be confrontations, but more it's about the best thing about having a customer locked in for a year, other than the cash flow, is why did they do it? Why did they commit to a year? Why do they love my product? And how can I make them love it more? Right? And because you want a customer base that lets you determine who they are, because so then you can find more of them. Right? If you're just saying, here's your $20, $100, $400 for the year, and then not understanding who they are, not learning about them, not trying to build that product out, not understanding that you have 80% of your customer base looks a lot like this. How do I find more of them, and how do I build the product that group wants? That's how I think it works in the best manner.
Thanks.
Next question.
Yeah, I have another question, Charles. I'm wondering if you're doing a lot then with doctors as entrepreneurs, meaning a lot of what we're talking, neuroscience, some of these other kinds of areas that are emerging through the pandemic and beyond. Are you into, because I'm involved with the Cleveland Clinic and University Hospital here in Cleveland, for example. Are those the kind of things that we always have a hard time funding some of their initial thoughts on this? Are you interested in that kind of a thing that would be more, I call them, I enthusiastically call them doctors as entrepreneurs, but they're a rising class that have a lot of solutions to some of these unique problems. And they're looking because they're no longer having the individual practice they used to count on for financial long-term growth. What are your thoughts?
I mean, any business, we're sort of agnostic in a sense from who the entrepreneur is originally. We actually invested in, it's a good example of what I talked about before, in a company called Radish Health that was a doctor who was actually then became part of the practice team at Oscar Health, and then realized that, creating an in-company, basically taking One Medical and putting it inside company, and allowing that to work. And he's done a really good job at utilizing COVID as a way to get customers and then building long-term. And so that's an example of he happens to be a doctor, and he was the first practicing doctor within that company. But he just understood the market really well, incredibly smart guy. And because of his particular background, was able to see an opportunity. So we're thrilled to be an investor in something like that, which truly does impact the access to healthcare, right? So that's how it fits our thesis. So yeah, it's not, we're not gonna say yes or no to anything in advance based on the background. I do think that doctors are entrepreneurs in many cases. And so, yeah, if it's something that's interesting to us, it's something certainly we'll have a conversation about.
Thank
you. We also have a latecomer to the conversation. I don't see the name, it's 415. Do you want to introduce yourself and tell us what you're working on? And you're muted at the moment.
It's just Sam rejoining. I was listening.
Oh, okay.
In. I've been in transit. But just audio only, and I just had to redial in.
Oh,
so,
okay.
I did have a question though, or a bit of a comment. But I love your deal flow philosophy, and it's very unusual and kind of refreshing to hear a fairly rational approach to deal flow, because so much of the industry is like super clubby, and it's a little bizarre, really. And a lot of folks from underfunded, like women and minorities, have commented on the fact it's almost like the definition of an old boys club, right? So I love the fact that you're sourcing your deals in an empirically driven way. Do you know any other VCs that kind of share your philosophy for that are in different verticals? Obviously, what we do doesn't directly relate to your investment thesis, but do you have any kindred spirits that are doing stuff like in the media tech space or in other areas?
I don't know particularly about spaces that they invest in. I think Charlie O'Donnell here in New York has done a really great job at saying, warm intros are stupid, and and he'll take any, he's not going to take every meeting, but he'll look at every email, or he'll try to. I think there's a number of conversations. Del Johnson on Twitter is a guy who's trying to lead this, but I think in some ways we're sort of past the no warm intro. I mean, we are proactively. One thing I didn't mention before that I should have is, we're trying to make an effort too to join lists of folks who are, there's a number of email lists now where, particularly like Lolita Taub has a newsletter where she's, has gathered together underrepresented founders and is targeting emails to particular investor groups, right? And so I get that email every week. I look and I try to schedule at least 1 or 2 meetings from that list every week in companies that we're interested in, right? Because I do think that, not having conversations with underrepresented groups is just a terrible investment philosophy, right? It's if you said that to a hedge fund, they'd be, what are you talking about? Like, what? Analyze the whole space. You can't just analyze part of the space.
Right.
So, and that it has ancillary benefits, great, but we want return. Ultimately, we're still capitalists.
Yes.
Yeah, absolutely.
So I know that nobody's going back to the offices. They're starting to now with COVID, but I know that you guys never had an office because we met at a restaurant, and Tony used to always meet at a restaurant. You remember Tony. So why was that? I'm just curious.
Why did we never have offices? Because Bill is cheap. No, I mean, we never had a big enough fund to create the fees to take office space. It just never made sense. And then once you get into the operating mode of working that way, there's just no reason for it.
Okay, just curious. So then you have all been doing team meetings over Zoom or various other platforms for a while now. You must have been. And I know that Mike was flying in all the time as well.
Yep.
I have a question.
Oh, sorry.
Are we getting an echo? Here, please go. Mm-hmm.
Okay. I just wanted to ask, how hands-on are you in the early stages when you take on a company, and then what is your expectation of the company to you and to work with you as well?
Sure. Because we have such a big portfolio, I mean, currently we have about 210 active companies. Most of our help is programmatic, and we focus on 4 areas, and then separately, what is the most important thing that we do in terms of help, and it's hiring, PR, sales, and marketing. And we do really what I would call sort of clinic-based help, right? We're doing sales training, marketing training, PR training, Holly Jacobus on our team, who used to be based in New York, now is out in Wyoming, is really good at constructing, particular advice and programs that allow for startups to learn about that. And then she also does help on an individual basis. And I do a lot of the hiring stuff. I'll do a hiring clinic. I have a very particular process for, I think, how startups should think about hiring. But what's the most important thing for us as early stage investors is getting our investments to the next stage, right? How do they raise that next investment? And so for that, Mike, our managing partner, is really good at sort of strategizing that. So he works individually with those folks. But we also have a tools-based approach here as well, right? Where we have a tool that we call the very striking term, the VC Finder, right? And it's a tool where we give access to our portfolio, allows them to go in and put in a bunch of criteria, and then kicks out investors that they might not know about that are in our networks, so that when the company says, "Oh, who should I talk to?" we're not trying to remember every VC I've ever met. It's more that this actually is an AI tool that kicks out a response and then auto creates potential introductory emails for us to just forward onto the VC, right? And we had a best example of that. We have a really interesting robotics company that's looking at prosthetic limbs based in Poland. And there's not a huge VC community in Poland. Great science, great company. And we introduced them to their Series A lead through that tool finder, a company based in New York that they never would have, maybe they would have researched and found whatever, but it took weeks. It took 4 hours. So we're really proud of that.
Thanks.
Yeah.
Charles, I have a question.
I think actually, I don't mean to, I think Abby had a question in parallel to Catherine. And so.
My question is actually about prestige pricing for CPG products, because you do have a lot of those types of brands in your portfolio. As far as pushing the limit on what makes sense in those spaces, are there any sort of guidelines or formulas that you've seen be more successful there?
No, I think the most important thing there is to experiment as much as possible and push the pricing as much as you can. And again, it's about having that conversation. And I think great entrepreneurs are really good at the combination of analyzing real data, in other words, data that you see from a spreadsheet from your system, and anecdotal data, right? So it's that combination of having the right amount of conversations with your customers, actual real conversations, and really digging into the numbers and understanding what they mean. And so I think that as much of that as you can do on pricing, the better. I don't have a good, I've never run a CPG company. I don't know that well enough specifically. So, Sandeep?
Yeah. So looking back at these 200 plus investments you made, if there were certain markers that you would say separates the top performers from the not so top performers, are there certain components of like the mindsets of the teams or product market fit? Like what are some of the things that you see that sort of separates the top performers from not?
I think the most important thing for an entrepreneur is, which is sort of how I'm reading your question, is honesty to themselves, and how that translates into all of their relationships. And whether it be, starting with their relationships with their team, right? So their ability to translate what they know, what's actually happening, and manage a team based on what's, being honest about what's happening, whether that be in, do I really need to raise money again? Am I running out of money? Should I be raising the price? What am I actually seeing? And not making decisions based on what the world thinks, but what I really believe and what my facts are telling me. It's the number one thing. And that translates across every single thing, right? It enables them to build trust within the organization, which is, to me, the number one factor of internal management, right? Is the ability to build trust and have honest conversations within an organization. So that is the one thing that we see again and again and again. And anytime you see an entrepreneur that is waivers on that, they're just not going to be, they might build a good company, but they are not going to build a huge company. And that, because it also translates in the relationships that they have with investors, right? When they see a problem starting to happen that they think they need help from a fundraising perspective or external help, they don't wait even a day to start contacting their investors, right? They are out there, and we can't always do anything, but it's the weekly board meeting situation that happens much later on down the road, because that entrepreneur didn't think about the impact of getting into debt or not hitting a product not hitting a product deadline, that we didn't know about. That it's much, much harder, right? If you have 3 months to fix a problem, it's much better than 3 hours.
That's great. That makes a lot of sense.
Next question.
I have a comment, I guess, more, but so one of the reasons I really like seeing, I guess it's more of an instinct, one of the reasons I really like seeing a portfolio and a mission like Joyance is because I think I had the opportunity to be in a few different startup centers like New York City, Miami, various places in California over the years. And obviously, well, maybe not obviously, but I've been involved also in discussing diversity and whether it's like gender diversity or other types of diversity with various people. And I think for me, I guess it's always been a personal philosophy that when you believe in something, such as the mission of Joyance, you believe in something unique, something that you've thought about, taken time to define. That's sort of the best way to improve diversity, actually, because when you just have a bunch of money that's looking for places and you don't really have like a definitive purpose and things that you like really, really focus on and have thought deeply about, then you get that echo chamber where, they're just, you get like these sort of cultural assumptions, and you get a lot of talk and a lot of maybe the inability to see where value lies in a company. And you get a lot of like assumptions about people's characters. Yep. So I think there's no real way to directly say, okay, let me go find X category of people and get more of them in my portfolio, because there's no like financial description of that you can discuss with your LPs. Whereas being able to, clearly define your metrics, even if they are very difficult to define, like your metrics are, like Joy, really helps to actually invite diversity, and mostly I think just cuts down on the echo chamber. So I feel like every time I see a VC or a company who is just really focused and passionate about something they've thought a long time about, that's actually the best way to improve diversity. So I just want to say, like, it's exciting because I am like sort of a science geek to see you combining these things, but it's also, I think, good for the community to have companies who are willing to like stand up for very specific values. So.
It's interesting because diversity is not a goal of the fund, right? At its core, right? The goal of the fund
mindset is as important, and I've talked to a lot of people who are involved in like racial diversity, and diversity of mindset is a good way to improve racial diversity.
Well, that's it. Well, so that's where I was going, right? Is that right? And if you're operating in a scientific basis, especially when it comes, well, I shouldn't say especially, but and when we talk about mental health, which is where you get, the most impact of joy, you want to impact the most possible people, and in order to impact the most possible people, you can't limit the types of people that you're trying to, for whom that can happen.
Of course. Yeah.
And opening yourself up to all different ways that people experience joy and really learning about that, and understanding what that means to a mindset. You know, an ancillary benefit to that is creating more diversity within customer bases, and therefore within the companies we invest in. And it is you know, it's because it's been great for me because originally I worked in ad tech companies, right? Ad tech, oh God, like if you went out of business, nobody cared, right? Nobody cared. You went out of business the next day, nobody cared except your mother. So it's great to be able to invest in companies that are making an impact in the daily lives of people. And that's great. I'm lucky to be able to talk to entrepreneurs. And even if we're not investing, like opening as you say, opening yourselves up to those conversations really is I'm very lucky to be able to do that.
Yeah, but I think ultimately just believing in like a diversity of mindset and focusing on that is the ultimate way to improve diversity in other areas.
Oh, I could not agree more.
So since you do have an ad tech background, I'm wondering if you as an angel investor are still looking at ad tech, or you're over that?
No, no.
Okay, that was definitive. Thank you.
Yeah.
Anybody else? Because, you know, before you mentioned that you focus on how startups should think about hiring, which is a critical factor. I wonder if you have any pearls of wisdom to share, because I'm sure the entire group would like some insight, would love some insight onto that. I know I work with a lot of entrepreneurs and on a one-to-one basis, and they think that having the tech, perfect and building the tech team, they don't understand the importance of the other people whom they need on the team as well. So what advice would you give, or do you give?
Sure. I mean, there's sort of, the first thing is that especially early stage companies, is you want to have as many people hiring in the hiring process as possible. And you're not going to have an HR person probably. And so how do you create systems within your company that allow for maximum amount of people involved? And I think that's important because you want to understand the culture you're trying to build, and you want to see if people you want people contributing to that, right? You want people contributing to adding to that. So with that in mind, my view is that you need to evaluate candidates in three things. The first of which is, can they do the job, right? Can they actually do the job for which you're hiring? The second of which is, do they have the right personality to work in a startup? And then are they right for my startup, right? So that distinct differences there. And then really tactically, it's about creating an interview plan, an evaluation plan that takes those three things into consideration and then gives you a way to create an index, right? Because what I found early on at Etsy was like, we had everybody interview everybody, but no one knew how to do it. No one had ever hired anybody except me. And so you're legally, it's problematic because, you have developers who are interviewing candidates who have no idea what questions are legal to ask and what aren't, right? So the initial reason I started scripting out specific questions to ask candidates was so that we didn't break any laws. So there's sort of a dumb way to stumble into the idea that once you have the same list of questions for every candidate, it's much easier to create an index, especially when you have people that aren't used to evaluating candidates for hiring them. And so that's sort of a very short answer to the way I think about it.
Thank you. Entrepreneurs?
Charles, I have another question. You said you're a follow-up investor. Would you give some advice to us as entrepreneurs as how we should look at our primary investor, what you look for? Because obviously if you're following up, you have some criteria in your mind that makes it successful. What should we know when looking at our primary investors to make it so that someone like you wants to be involved as well?
I'm not sure I completely understand the question. It broke up a little bit, but I think what you're asking is like, how do you think about determining follow on, or are you talking about specifically?
No, when you mentioned that you did a lot more. You didn't.
Oh, so that we don't, right? We don't lead. Right.
So what? Yeah. So if you don't lead, then how do you evaluate that? And what should entrepreneur founders know about picking their lead investor?
Sure.
Okay.
All right, I misunderstood. So yeah, I mean, your primary goal is to find that lead investor as soon as you can, which is, oh my God, so much easier said than done. When you're evaluating a lead, you want someone who is willing to take on the responsibility of being a lead, whether or not you have a board of directors, right? So are they willing to act, even if you might not have, depending on the stage, a board of directors, is that lead investor willing to act as if they're on the board, right? Obviously you have a board of directors, you want them on the board, you want them to take that responsibility. And so what do you need from someone on your board of directors? You need consistent accessibility, right? You need honest feedback. You need an understanding of the market that you're addressing, right? So those are the three things to me that you're looking for from your lead investor, right? Can I always get to you when I need you, right? Do you mean what you say? And do you know this market really well? Because I need help in those areas. I need someone to go to give advice, right? And our view as a fund is that we try not to give business advice because we don't know your business well enough. If you have a particular thing that you need help with that we can help you with, fine. I can help you think about how to hire, right? I can't help you determine your market entry strategy. I can tell you what I've seen other companies do, but I don't know. I'm never going to know your company well enough to give you good advice. But the lead investor should commit to learning the company well enough that they can give you good advice, right? And I think that's really important. So that's one of the things we talk about, the responsibility of being a lead investor. Knowing the company, being accessible, and understanding what that means.
Thank you.
Yeah.
I know you do growth stage. I mean, you do follow-on investment. Do you also invest in growth stage as well?
We just raised a fund to do that. We haven't made any investments from that fund. But we've also done a number of interesting syndications where we have pro rata, big amounts of pro rata in later stage companies. Like we syndicated a Boxed, which is going public via SPAC soon, right? So about a year ago, we gave some of our LPs the opportunity to invest in that. What turned out to be their last round of fundraising before they went public. So yeah, we do take as much pro rata and take follow on very seriously.
And is your investment philosophy the same or in the growth stage?
I don't mean you mean, well, I mean, sure, because these companies are the same.
Yes.
So yes, but I mean, later stage is a much different type of investing.
Oh, I know that. Okay, thank you.
Yeah.
So anybody else? Next question. No?
I guess I have some additional questions about like choosing a lead investor. When you mentioned like some of the ways that you can lean into an investor for assistance, I'm just wondering what's appropriate. I guess from my end, I was just kind of evaluating, what we need financially. And I have been looking for other sources of advice when there are some areas that, my co-founder and I don't have strength in. What are some of the ways besides just the, it's a smart financial fit that you might want to sort of determine whether or not the investor is a good fit?
Yeah, I mean, I should have said before, it's easier said than done, right? So sometimes you're not going to find, I'm sorry. I just have to check my phone in case it's one of my children. You're not always going to find an investor who lines up with all those things, right? Sometimes you got to take money, and it can be a balance between, right, someone who's willing to write a check and someone who actually lines up with the type of investor that you want. And it's the most important thing is to get the check in the door at some point. So I would, that's a really good reason to set fundraising deadlines for yourself and say, look, if I'm going to try to build up competing leads, but if that doesn't happen, I only have one person willing to lead, are there any negatives to that money? And then, if not, you take the money, even though they might not be the, holistically great investor that you were hoping for.
And then as far as some of those things that you're saying, like to determine a fit, like what are some of the other things that you might want the investor to do to support the business beyond money?
Yeah, I was distracted by my phone. I think the thing that I think you're actually taking a really good approach, which is determining all the things that you need in the company from an external perspective, right? I need advice in these areas? We need strength in these areas, right? And if you can find that in an investor, great. If you can't, advisory board, right? And so you're constructing, your sort of personal advice team, I would call it, or your company advice team. And some of those might be investors and some of those might be advisory board. And then you're filling in the slots based on what you need, I think is the way to think about it. Okay. Hopefully you can get them an investor because because it's great to have someone who's truly aligned, right? Because they've invested money, like they really have an interest. Advisory boards are great. Advisors can be great, but often you're paying them. They're not paying you, right? So when you're paying them, depending on how well you know them, sometimes they're just going to tell you what you want to hear because they're happy that you gave them 10,000 options or whatever the number was, right? And I'm not meaning to disparage advisory boards at all. So as many times as you can, you want to align the interest. And I would push your advisory board members, by the way, to write a check. In fact, the best investment the most successful angel investment I ever made, I made because the CEO pushed me. She wanted me on our advisory board and she pushed me to write a check, which I did. I believed in the company, I believed in her, and I believed in the mission. And yeah, so that's my only angel investment that ever IPO'd. So that worked out.
Well, congrats.
Yeah, thanks.
Next question.
So I have a short question. So with all of these companies that are focused on good, whether they're science-based or more of like a community effort, what would be your advice regarding like either forming that board or getting advisors or investors in companies? Like who are the most helpful for that type of mission? Because sometimes it can be a little bit less like sort of like I guess making more making more of your own market if you're sort of approaching something from a very different angle. So it's sort of hard to say like, oh, okay, well, I can get existing people in this industry on board. I can get people who are really innovative thinkers. I can get people who really focus on doing good. What have you seen that's worked in terms of?
I mean, this might sound insane, but I think one way to think about it is, and I'm not talking about their social media presences, but what I would say is like, okay, what is a dream team of influencer marketers for what I'm committing to, right? And what I mean is not externally, right? But who can influence me to make the right decisions? And where does that, like, where do I need to be influenced? Where do I need, and it's sort of beyond knowledge, but it's like, if I'm uncertain, who can I find that's an ally of mine, an advocate for me, that is going to help me make a hard decision and influence me in the correct way, right? So that's how I think about it. That's how I think about who's willing to have a hard conversation with me, who's willing to say, wow, you have this wrong, because you're trying to build a company, but my view on this comes from years of research or working in the field or understanding the science better than you do. Because especially in these companies, if the mission ever misaligns with how I should say the way you're doing business ever misaligns with the mission, everybody's going to know. Your customers are going to know. Your investors are going to know. You're the worst of all, you're going to know. Right. So really, it's finding people who you trust when they're trying to influence you.
Yeah, great answer in this context. Definitely. Thank you.
Yep.
So we have a few more minutes left for questions, if anybody has one.
I mean, I'll say that relatively speaking, what I do is really easy. And the first question I ask all of the people I talk to about whether or not we're going to invest in them is, why are you doing this hard thing? And like, what is it about your life, your background, your parents, your friends, your school, that makes you want to start a company and build something, as opposed to being a doctor, a lawyer, a physicist, whatever. So, you know, I applaud all of you for that. Because it's not easy. It's not easy on a daily basis. It's not easy long-term. There are great rewards, both personally and potentially financially, but kudos to all of you.
I was going to ask you if you have any advice for the entrepreneurs. That was great advice.
My advice, which is different, is to take care of your mental health.
Which is very important, because we know that the depression rates among founders is very, very high. Because it's tough.
It's tough, and I've experienced that myself. Like it's really hard to get the right balance there.
In fact, we had an investor speak a while back, and he said, you know, you want to reach out to people for critique and advice and blah blah blah. And there are a lot of people who will just be negative, and so he said that if you can't change the people around you, then change the people around you, which I thought was great advice too.
Yeah.
Actually, I have a question. If we want to get in touch and follow up, what would be the best way to do that?
I mean, you can, Bonnie and the team have my email address, but you could just email me at Charles at Ataraxia.VC, which is, yeah.
You can put in the chat as probably the easiest.
Great. Super. Thanks.
Would you prefer that they reference? Go ahead. I know that you accept cold emails. Would you prefer that they reference that they were here at the breakfast?
Oh, sure, because then I do have a reference point, but
yes.
Yeah.
Does anybody else have anything to add? Do you want to add your LinkedIn contact as well? That's up to you, of course.
Oh gosh, yeah, sure, but if I could figure it out.
You know, I didn't realize that you and I weren't connected on LinkedIn. I sent you an invitation as well. I thought we were.
Oh, I assume we would have been.
I thought so too.
I mean, I'm easy to find when you Google Charles Smith. It's like super easy.
Yeah, you wouldn't think so. Yeah, right.
I can't come up with it right now, but
you
can find me. I mean, look, Charles at Social Starts will come up on LinkedIn really quickly.
Okay.
Oh, look, they found it. I just didn't have time.
So, parting question or parting remarks from you, Charles?
I made mine. Thank you so much for having me. I really appreciate it. Good luck.
Thank you. Thank you for participating. Did you have something to say, Sam? God, I'd love to hear more. I don't know if you want to go in depth about how startups should think about hiring, but I'd love to invite you back at some point, a while down the road, to address that specifically, because I know it is an issue.
Sure, happy to do it.
Oh, thank you so much. Thank you, Charles, for being here today. And I will thank Mike as well. And thank you, everybody, for attending. And we're here every 2 weeks with one investor and a small self-selecting group of entrepreneurs. And in the meantime, no, we won't be here in 2 weeks. We'll be here the week after. 2 weeks is Thanksgiving. So we're wishing you all a happy Thanksgiving. And thank you, everybody.
Thanks, everybody.
And thank you,
Kelly. Thank you, Charles.
Bye, everybody.
Bye.